I want to go back to the situational trades because I do believe that a lot of traders understand what you're saying. I mean, I totally understand what you're saying. You talk about the 3-point move on the Fed, 3-point move almost on a Powell day where it's like, a rally into it, break, and then a rally back, or vice versa for other things, right? Where do you think most people go wrong with trading a move like that? Because most people do see what you're saying, but most people either are not consistent with it or they just ultimately lose in it. But you're successful with it.
Correct. And it's something that PAX talks about a lot. It's really the risk management approach. So I'm going to give you a situational trade. You can backtest this. I've already done it. So the FOMC announcements, they're on Wednesday at 2 p.m. Backtest this. I go back 10 years, 12 years, as far as you want. 80%, or we're still at 80% because I just did the latest calculation. 80% of the time, the S&P will open the next day the opposite of where it closed when the FOMC day wrapped up at 4 p.m. So I call it the FOMC flip. So I started noticing this probably in the late 2000s. Like, why is it that the day after we rally if it closed red during the announcement day? So I started tracking this thing and I started trading it. So I just called it the FOMC flip. So what I would do is just trade the same amount of money, $500. The next day I'd buy either, calls or puts, depending on how the market closed on the FOMC announcement day. So what happened on the 18th? SPY closed down $1.67. What did I do? I bought the 569 call for 22 cents. $500 worth. What they opened the next day? $3. That was the day we had the gap up the next morning on Thursday. FOMC flip played out again, 80% success rate. So I was talking to someone on Twitter about this. I said, would you take a trade that had an 80% success rate? Because he's like, well, you don't know. It could still go bad on you. You got a 20% risk of losing. I said, but how many trades can you make with an 80% success rate going back 12 plus years of backtesting? Not many. Okay, so and if you do the same amount of money each time, over 8 out of 10 wins, you come out pretty good. I've been doing this FOMC flip now for over 10 years. Why does it work? I have delved into this thing. Is it due to some rebalancing thing at the repo facility? I don't know. All I know is it works, and you can backtest the thing. I'll do the same thing in November 6th, when they do their announcement. I'm going to just go the opposite way at the end of the day, $500. I just did the same amount. It's that kind of thing. It's just managing your risk. You don't YOLO into this. If I had YOLO'd into it on the 18th, I wouldn't be talking to you. I'd be on a yacht down in the Caribbean somewhere because I would have. Yeah, I wouldn't have done that though. But I'm serious. 22-cent call the next day is $3. It's a pretty good move.
And it's probably because I think what you're saying, and I believe I agree with this, is that people do see things like that. I think that most traders have a really good knack for noticing these types of patterns. I think we all have that inside of us. We're all some pattern recognizers. Some people see it by looking at the dome. Some people see it by looking at a chart. I'm not somebody who looks for like head and shoulders, but some people they could spot them out of a 1 minute, 30 second, 5 minute chart. They just see them. Visually, people see patterns.
There's a whole slew of them. I have a whole calendar of these things. The last trading day of June, 8 times out of 10 is red. It's the biggest rebalancing day of the year. Every first of the month, 7 times out of 10 is green. The half days before Thanksgiving and Christmas, 7 out of 10 times are green. I got a whole slew of these things. And if you just trade them with small amounts of money, it's amazing because why? It's human behavior. They're doing the same things. People feel good around Thanksgiving. They feel good around Christmas. First trading day of the year, almost 8 times out of 10 is green. Why? Are feeling it's a new year, new start. This is all behavior-based stuff. And if you just make a calendar of these, you can have about 30 or 40 trades a year that have a high probability of 7 to 8 out of 10 of winning, but you just do a small bet. You don't YOLO. And you can add quite a bit of money to your winnings just by these situational trades like fading Powell and things like this. Do they win every time? No, but they win pretty darn often. I think 7 out of 10 is good enough for me.